market setup from here on, and which are the sectors that are looking attractive, which are the space that you should bet on. We have Sandip Sabharwal joining us on the show right now. Very good afternoon to you, Sandip. And yes, the markets have not been doing anything. I think your break, and that's what markets were doing. They were also taking a break from the rally.
Yeah, so I think beginning of the result season, it was very apparent that given the levels of the market, it's very important for the results to come out in a manner where the results are such that they help sustain the market move. However, I think across industries, we have seen that results have been somewhat subdued, be it financials, where we've seen some stress built on the balance sheet as well as pressure on net interest margins, or be it cement, where earnings have come in much below expectations. IT results were in line, but nothing great to talk home about. Consumer names have reported disappointing numbers. So I think the result season is on, and markets are trying to absorb that entire news flow at valuations which are higher than historical valuations. And on top of that, we also have a phenomena where reallocation is happening from India to some other emerging markets. So I think that was estimated to be around, should have been around $15 odd billion. So that should be more or less true. I think another $3-4 billion maybe. And then things will go back to fundamentals.
And like you touched upon, actually talking about the fact that it's the earnings season, and that sort of may have had a rub up on the markets. And talking about the earnings, if you touched upon consumer names, FMCG sector, those earnings have been actually disappointing. They have not shown a growth of as much as the street was anticipating. 3 months ago, everyone was talking about how FMCG could be a trade on back of the shift in the policies or better monsoon. But that doesn't seem to be transpiring, isn't it?
Yeah, so there was an expectation because 2 years of subdued growth in the consumer sector combined with the moderating inflation as well as normal monsoon should lead to some sort of revival. However, that's clearly not played through, and it's possibly a reflection of the pressure on the pockets of consumers and the income levels not rising at the same pace at which the inflation has been over the last few years, even though it's in control today. So many of these companies are now indicating that the festival season and as the rural incomes start coming in going forward, things could be better. But on the urban side, things seem still subdued. So the recovery is pushed back, and that's the result. And that's what we are seeing in the stock price of most of these companies.
Right, so that's the way how the FMCG sector is panning out. Looks like the recovery is a bit pushed back, and you've seen actually some of these names actually under pressure in trade today. You also had Colgate that came out with his numbers earlier on in the trading session, and you can see the stock is also under pressure in a trade today. We have Naresh Mirani joining us on the show right now. Good afternoon to you, Naresh. And today looks to be a better off day. We've been actually trading for the most part of the trading session in a range.
So on the index, we are in the range, but the breadth is not as great as it should be given the markets, what we saw recovery in the mid cap and small caps yesterday. So we still continue to grind in a very tight range. Almost the last few hours, nifty has been in the range of 20 to 30 points, or rather 40 points. That's too small a range for an index which is 24,000 plus. So overall, we are still finding a base around this area. But once we cross 24,800, that is where we call a trend change. So for now, we are still stuck in this selling pressure as such. Overall, we are seeing rotation in terms of sectors topping out. So it is FMCG after a huge rally from June to now has topped out. Pharma is taking a back seat. But the good part is banking space as such has been looking much better compared to the index.
What's your take actually, Naresh, when you talk about the real estate sector? How is it looking to you? Because off late it's not been having a good time. Last 1 month has not been pretty good for the space. Today also is under pressure, about 1.14%. What's your take on the real estate space? Do you think that this one is taking a breather after a spectacular 2 years that this one had seen?
So it's a breather, and there could be, say, some supports going back to the June-July lows. So we had a clean run on the nifty real estate sector from 2023. We barely had any correction of more than 8 to 10% on the index as such. And the index had topped out a few months back in June, July, and now we've been consolidating. So you can pick up a DLF, etc. They've been consolidating for the last 6-8 months. But I would expect closer to the lows of June, July, that should not be broken. So we are getting close to that price points. We are at July lows. Election lows are another, say, 6-7% away. So I would expect a bottoming out case for some of them, but the bounce may not be very sharp. So for now, a consolidation after a 1.5 year strong rally.
Sabharwal is back. He's back from US looking fresh. I thought you would be jet lagged and all groggy.
Yeah, I'm jogging only.
How's holiday?
Yeah, very nice, very good. It's a great country to visit.
Did you meet any FIs and did you ask them that why are they selling India?
No, that we don't need to ask. We know that that reallocation trade had to happen, and that's playing out. So it's good. Like it leads to some sort of correction.
Are we reaching that stage, Sandeep, where it's time to start buying the fear? It's not about Nifty, it's about individual stocks. Average correction in PSU stocks is about 30%. Average correction in some of the PSU banking stocks is more than 20%. Fundamentals have not deteriorated that badly that it warrants a 30-40% fall.
Yeah, but the rise also was so phenomenal, and the main issue was that too many people got into PSU stocks and many of the fancied sectors, and that's leading to this sell-off. We could still see some more sell-off in the PSU side, but my base case was that at the peak of the market, that 23,900, 24,200 should be the range where market should correct to. Results have been a bit more disappointing than what I thought they should be. So to that extent, I would still think that the bottom could be around those levels only, but we could get into a range kind of market, and like you rightly said, then it becomes a stock specific market once the big sell-off ends, and that is something we should see starting from November.
On your radar, which you would like to buy at a 5% decline, you'll add more at 10% decline, and you'll add even more if it falls 15%. Sandeep.
On the large cap side, I think Reliance has corrected 20% from the top. So for most of the large caps, if we have to assume that it's a bull market on, a 20% fall from the top typically should be something we should keep a track of and buy at those levels. On the consumer side, like HUL again is down around 17, 18 or maybe 20% from the top. So if it goes to around 2200 levels, I would think that 2250 also, I would think it could be interesting to buy into. And LNT, I think even at these levels looks okay. So if the overall market corrects, if it falls another 5%, I think that should be another stock we could look at. Or some of the auto stocks also, if they fall another 5-10%, like a Bajaj or a M&M or Maruti.
Bajaj, M&M, Maruti from the auto space, Reliance and L&T. And there's one more which I missed.
HUL.
HUL. Why HUL? I mean, isn't that expensive? And the growth, even if it comes back, it could be a, 2 will become 3, 2 will not become 20.
And that's true, but for most of the consumer stocks, it's been my historical observation that when many of these stocks correct 25-30% from the top, so I think HUL went to around 3,300. So if it comes to around 22-2300, it will represent a potential candidate for 15-20% kind of return. So in a low volatility stock, if we can make 15-20% in a year, I think that's a good return.
Let's switch gears and talk about Reliance. I think Nuresh spoke about it in the morning and Sandeep has just flagged it off. Is Reliance reaching that point from where the upside could be more and the downside could be less? It's just been a straight line fall, guys. Just dog of a stock in terms of underperformance. Let's look at the 1-year chart. And if you look at the 3-year chart, I think Reliance post-COVID was the talk of the town. They're doing everything right. Raising capital in their subsidiaries, foreign types were coming in, Jio came, Meta came, Google came. They did a partnership with Apple. They started investing in companies. Everything was going right for Reliance immediately after COVID. But then, ever since they've started increasing the capital expenditure and the debt what they've raised in the balance sheet, markets are saying that, okay, will they have to do another round of capital raise? And that in a sense is pushing the stock down. In last 2 years, 3 years, Reliance has given a 2% return. I can add back the value of Jio and say, okay, it's actually 300 rupees more. But bottom line is that, Nuresh, this is a stock which almost had consolidated for 3 years now.
Tendency for Reliance, if you go back even previously, after say 2010, it did nothing for multiple years. We had this huge rally in 2017 to 2018, then we corrected with the markets. 2021, it topped out, then 1 year it did nothing. Now, it looks interesting for the fact that the correction has taken it back to the prices where it was 1 to 2 years back, roughly maybe at 10% more due to Geofinance. Also, the fact that the stock is below the June 4th lows. Now, that is the point of time where Nifty was 21,200 to 22,000. And that time the stock was at, say, 2,700, 2,740. So out here at 2,650, 2,700, the stock has a 1 year return of zero. Also, the fact that it is below, almost equivalent to a 21,000 mark of the Nifty. It's a good entry point if one is ready to digest another 5-7% of volatility, but I would expect a bottoming out case here and eventually a move towards 3,000, 3,200 over the next 1 year.
Right, target of about 3,000 to 3,200 over the next 1 year coming in for Reliance Industries. But on that note, we'll slip into a break on this edition of Closing Trades. When we come back, we will track the market move and also ask our experts which side of the fence are they betting on right now.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.